Okay. About the scalping webinar from yesterday. uh, there is a bit of a problem with actually getting all the cursing away from it, so I think we will make it a hidden upload, and if somebody wants to view it, they should email us, because like removing all my cursing from it is going to probably take one whole day. Anyways, okay, I have spammed enough here. And now I'm going to start with a poll, as always. Now I would like you guys to tell me, oops, not presentation. I would like you guys to tell me which pair you want me to cover first. Okay, everybody please vote. Моля, се сме от винаги само гледаш за въпроси, ако има нещо. Okay then, I'm gonna have you in mind on the Euro Aussie. The reason why I'm not covering the Euro Aussie is because I'm waiting for a large pullback. I do not see on like personally for me Euro Aussie, while a great pair to trade, especially now, I want to see a large pullback on which I can target 400-500 pips. Now I would like to ask everybody to please vote on CHF JPY. I'm going out. I'm going to cover the CHF JPY first, and then I'm going to move to whatever the poll is, to whatever people in the room want me to cover first after that. So please, guys, make sure to vote now. I have 6 people who have not voted yet. Everybody, please take your vote. We have 5 more people who haven't voted. Please vote. Okay, guys, I'm going to show you the results now. 3 people didn't vote. So we're going to start with the euro dollar. I'm going to move to the euro yen, check the euro franc, and then I'm going to give you Alexander to cover the rest. Now, first, before we start with the euro dollar and the euro yen, I am going to cover the franc yen, the CHF JPY trade. Now, CHF JPY has a very good crab pattern. This is a very nice crab. It is nearly perfect. Well, not nearly perfect, it's absolutely perfect. Now we are waiting for a bit more upside to the 1.618 extension before the pattern is completed. Crabs have an XA extension of the leg XA at the 1618. So we are going to wait now, because we are going to be pretty much top picking in a sense, despite a valid pattern. We have to keep leverage to the minimum. So if your account is, say, 5,000 euros, if your account is 5,000, you can see that my stop is at 101.1, just above P. This is 314. BC extension, which is P. That is how I determined my stop. I want my stop to be above P. Pi, in other words, in English. Because we're going to be top picking, if your account is 5,000 euros, you should not enter this order with over 15k, with $5,000. You should try to keep the maximum leverage at the start of this swing, to 3 to 1 of your account, because this is first a wide stop, this is like 40-50 pips stop loss. Second, we are in a sense stop picking. Our first target is going to be 200 pips pretty much at 98.7s. After we have a hit on the short order, yeah, pretty much 200 pips. Let me remove that. There is some potential to reverse from here. I personally don't like it. We will need to wait for confirmation. It is absolutely possible that the crab is completed here, because this is now what you see over here. This Fibonacci over here, the 224, the 2618, and the 314. Those are the BC extension. This thing, the extension, the BC extension Fibonacci's. So, okay. So I would expect now to either reverse from here, which however I would not take because it is under the 161.8 XA extension, or to reverse over here. Now the only FIP in terms of the BC extension, now when it comes to crabs, the requirement is for the crab BC extension to be between 2.24 and 3618. Now I like this potential reversal zone because it is between 2618 and pi, 314 pi. Now 314 is an awkward ratio that you do not see in anywhere outside of harmonics. Harmonics are the only thing that cover pi. I have, personally, at least, I haven't seen the pi ratio used anywhere outside of harmonics. However, you would be surprised how often this thing holds. You would be surprised. Personally, I'm always surprised how often it holds. So this is the trade order, short 100.6 with a stop loss at 101.1. We are top picking, so the leverage will be kept to minimum. Now, if we get ourselves executed, and if we manage to get going, we will get confirmation that this move is valid when we break this extension long. Can everybody see this extension long? This is a large daily extension long that we need to break in order to confirm this pattern. The hill. Excuse me for a second. Oh, that аз в момента трябва този вебинар. Колко кога ще дойдеш? Колко време имаш? В смисъл, аз тук ще приключа за половин час, така че. Добре, къде ще ходиш сега? Добре, айде ще се обадя тогава. Айде. Okay, guys, sorry about that. Confirmation that this crap is valid and that we are potentially going to see the shorts work for our full targets is when we break this daily extension long. This is the next daily extension long with an anchor 89.64. The high being, of course, assuming that we get our entry orders hit at the 1618 extension. So this is what we are going to be looking. Now upon breaking this extension long, if we get filled, of course, we are then going to start adding to this position. So for now, we have to keep the leverage to the minimum. We still don't know if we are going to see that upside. Personally, I think we will, because we are holding long levels on pretty much all yen crosses. So I want to make sure everybody understands what I have just said. Can you please confirm? And if you have any questions regarding this bearish crab pattern, please let me know. Crab. Okay. No, not sure. The 100.9 short the 160s with a stop 101.1. with a very small leverage, of course. With a very small leverage. This is very important because this is a huge stop. Of course, the target is very huge. We are going to look for, like, if we get filled over here, our target is going to be the halfway back long. We are looking for 4 to 500 pips. For 4 to 500 pips, the minimum. Now we also have, and this is important to note, we also have the large daily pattern, that shark that I've spoken about a couple of times. We have a bearish shark here as well. So this is going to get potentially quite tricky. Uh, I I am a bit worried on how things will turn out. At this point, it is a bit tough to say what we should be aiming to look at and so on. Sorry, not this thing. Yeah, this larger berry shark that I'm not even going to bother to draw is all the way over here. So anyways, for now this is only the crab that we have in the immediate time frame. We are going to target over 300 pips, so we should keep leverage tight. Uh, so that was for the CHF yen. I just wanted to do a short update on that because, as we noted, we are looking for further upside. We made a report over the weekend on the CHF yen, and as I said, we are looking for further upside. So we got this upside, and now we got a bit more to go. Now let's move to the euro dollar. The euro dollar maintains its most aggressive extension long. From what I can see, I think it is holding a micro long as well. Uh, Holding is a bit of a overstretch, I guess. So we are within longs until we fail. I am still keeping my I'm still keeping my swing long, that is from the 1.3275. For now, I still haven't decided where I'm going to book. My limit is like all the way up over here, but it's really 1.386. I'm just being flexible. So we will see how that happens. For now, all I know is I am not looking to book any profit until we hold this most aggressive extension. Actually, to be quite frank, I would consider this extension to be valid as well. So honestly, while we are above 1.35, I really cannot justify any level of short participation. I just can't see shorts working. We also have the next daily wonk at the 1.35s. So much support at this point. I'm looking for further upside one way or another. In the immediate time frame, we are holding the most aggressive bullish setup that you can find, which is this extension long. So we are on the 50-minute time frame. We are bullish while above the 1.353s. What I'm going to say is that we had this anchor go to target now once already. We traded this anchor yesterday. This was also a trade that we gave pretty much to our subscribers. It went to target, and now it is trading again with targets at 1.36. So it is trading again with targets 1.36. We could potentially now be doing a very micro, very small inverted head and shoulders. I'm actually feeling scalpish today, so I am going to take a small long over here. I'm going to take a small long over here with a 12 pip stop loss. I think it should be 12. Let's see. A bit more. I'm going to put the stop under this low. I am so I just took a small scalp. Let's see how that goes. My target is obviously 1.36. If you are a bit less conservative, you can go for 1.3608. So we'll see. But I like the setup. I was looking. Okay, now one thing I want to point out is, especially if you like harmonics, AB equals CD will be coming exactly at the 61.8 line. If we get over here, I think I might take a scalp with 4 or 5 pip stop loss. I still haven't decided on that. But at the current juncture, We are very bullish. We are holding this extension long, this 50% extension long, and I certainly do not see anything to point towards the downside. The only thing that we could potentially have, like is a sign that there is a battle over the trend, is that we are holding. We held in the morning, all the way halfway back short. Now this is quite important in a way. I wouldn't place too much emphasis on it simply because we are getting a pretty decent participation on the longs over here from this 50% long. So at the current juncture, I do not see anything to point towards further weakness in the euro dollar. I don't see anything to point toward further weakness in the euro dollar. This is on the micro time frame. On the bit larger time frame, if we check like this, we have a clear 5-wave rally now. This was wave 1, wave 2, wave 3, wave 4, and now we are within an extended wave 5. And this extended wave 5, the way I view it is this is wave 1, this is 1, this is 2, micro extended third wave over here, and we are now completing, or we have completed this micro extended wave 3. So we still have some more upside for this wave 5 to come. Now, when we complete this extended fifth wave, which just perfectly speaking, perfectly technically speaking, assuming that this is wave 3, should be less than 370 pips. So we would expect now, this is the start of wave 3. It's already up quite a bit. It can extend to the 1.36 mark. That is why I think that we are going to have one more push higher. Now, what I've been saying for a while. Now, I mean, in the end of the day, we are bullish until we are not, and regardless of how the way that waves are, we cannot overtrust them. But it is aligning with several things that I have been saying. Now, we started this month. We started January with a low on risk on Friday. You can see January the 4th. Was the low in risk for the month. It was a Friday. So what I would say is that there is an extremely high probability tomorrow. I don't know if it's going to be non-farm payrolls. I don't know how it is going to happen. That we are going to finish February with a high in risk. So that is what I'm going to be looking at. I am expecting a bit more upside. 136 sounds like a good level to cap and reject from. It is a round number. It is a huge level generally. So what I would say and what I would view is to something like that one way or another, and to start into February a very large 3-wave correction. Now actually it's not a very large 3-wave correction, something like that. And this is what I'm looking for February. Now I am personally expecting to see this scalp won't work apparently. I personally am expecting for downside in February. I am expecting for downside in February. We'll see if I'm right, we'll see if I'm wrong, but certainly that's how things are looking like. For now, we are bullish until we are not, with the most aggressive time frames all holding their setups. So we are holding all the freaking possible bullish setups at this point. So until we fail at least one of the extension longs. So I mean, screw that way, screw seasonality and so on. Until we fail at least one of the most aggressive extension longs, in this case, this one, we just cannot look for any downside, and it is very important for everybody to understand that. So any questions regarding that? Guys, any questions regarding? Is it clear for everybody? Now, one of the reasons, and now this is, I think this is a bit peculiar, and perhaps I should say it. I know that I should probably be booking the swing long at this point. However, because we have not failed even one of the most aggressive extensions, like ever since we started blowing through 1.34, we have been holding all the most aggressive extensions. So I would not consider booking this until we fail at least one of the most aggressive extensions. 15 pips less is not going to make huge of a difference. Perhaps when I see clear rejection and clear failure at one of the extension levels, I will reconsider and I will book my swing. For now, this is the way I view things, and this is how I'm going to keep things. Next, I'm going to move. So that is for the euro dollar. If you have any questions, you should ask them now. If not, I am going to move to the euro yen. Okay, moving to the euro yen. Now we are long in the euro yen as well. Now we have identified now several things. Okay. Okay, let me just remove some of the fibs because it is perhaps a little bit too much. Now, first I'm going to start with the fact that we held a daily wonk at the start of the week that went to target. So, we held this daily wonk on the euro yen. We went wonk here, like after seeing that this daily wonk is holding, it went to target. We have booked like pretty much most of this position, over half of this position. That's why I'm in no rush to book anything more. Now we have the potential, because we started slightly blowing through, we have the potential to either start new extensions and continue higher, or to pull all the way down here with same anchor new high before we continue higher. So we have indeed the potential to go down to the 122.014 level. Now, why am I not particularly worried? I have not trailed my stop any further, but I'm not worried at all as long as we are holding this extension wonk. We are currently holding this extension wonk. We know that this is a valid extension wonk because it came after trading a halfway back wonk. We traded this halfway back wonk to target and we started blowing through targets. We have seen clear participation. We saw clear participation yesterday on the GDP print, and we saw clear participation today in the morning, I believe. I don't know if it was GDP print, I don't know what it was, but we are seeing clear participation. We could potentially also be starting an inverted head and shoulders, a bit ugly one, but it is valid. So I am still looking for further upside. I am looking for targets at the 124.2s. I am looking for further upside, at least until we hold this extension long. At least until we hold this extension long. So bullish until we are not. OEM crosses, I mean literally OEM crosses, are holding their most aggressive setups. I just cannot justify any weakness at the current juncture. Now, one thing I would like to point out, and maybe that is relatively important, is that this correction over here that occurred at the start of the week is very, very similar to what we had over here. Now, let me just point it out. So what happened was we had this high, we had a run at highs, like here we were able to make a slightly new high, here we weren't, then we went to the downside, we broke shorts here again, went to the downside, held the one level, then went to the upside from support again, broke shorts again. So there is the potential for us to make one more low, and I'm thinking that we could potentially make a low that will align with this halfway back wonk. But there is a very similar fractals here, which further make me think that we are going to see at least one more high. That also aligns, for those of you guys that don't know, for those of you guys who haven't checked the site, I have posted an interesting chart on the website on the euro yen. Let me just pull that one out. This is the euro yen, and this is a bearish shark on the euro yen. This is a bearish shark on the euro yen. and that is why I'm looking for a bit more upside. This very sharp aligns with a very interesting level. It is the 126. So I don't know, like I still think we will see some more upside. I still think we will see some more upside. You can check the chart on the shark, and to be honest, that is also my guidelines. This goes for pretty much all yen crosses. All yen crosses have bearish harmonic patterns in development, so you know, like something in me is telling me that we are going to see those harmonics uh, get filled and get completed. So it is a big reason as to why I am as bullish as I am even now. The trend is up until it's not as well, and we are holding very aggressive extensions. Now, uh, are there any questions on what I have been saying on the euro yen? Some news coming out of the US regarding consumer spending and jobless claims, I think, could fuel some speculation into non-farm payrolls tomorrow. Any questions on the euro yen? We are bullish until we are not. Actually, I would not be surprised if we make new highs in yen crosses before non-farm payrolls tomorrow, and tomorrow to reject very sharply on the non-farm payroll print. Now, of course, this is speculation, but I'm just making sure that I pointed out. Any questions on the euro yen, guys? Any questions on the euro yen? This is a confirmed range at this point. It is a battle over the trend, but we are bullish until we are not. Well, I think there are no questions regarding the euro yen. I certainly wouldn't be shorting it yet. I think it's very risky. I think it's very dangerous. So I am not a fan of doing it. Now to move to the euro franc. The euro franc stopped us this week for break even, and it is now retesting its original setup. Now I am not gonna go long here. I am anticipating either range or a full halfway back long. So what I'm looking is I'm just taking the fib from 1.2 to the most recent highs. That also going to align with a very nice AB equals CD. You can see that the pattern is nearly perfect. A potential Gartley pattern as well. So the euro yen right now, I wouldn't play it on the long side just yet. I am going to wait for the 1.229s to trade first, or now there is always an or to see a break of all the way halfway back short. Now, if we see a break of all the way halfway back short, again, we are going to be set up in a confirmed range, and I probably will be looking to buy the extensions. So for now, it is in a no trade zone for me. It is either to get my fill with the 1.229s or wait for confirmation of longs working. The original setup we are holding is the halfway back long of wave 3. This is the original setup that we are holding. So of course this is valid until it fails as well, but I don't like it. So I guess there is always there is some sort of personal decision that you have to make with these things. I'm trying to reduce my risk as much as possible and trade as least as possible. So you know, I don't want to expose myself to a market. We could potentially be starting a large wedge as well. So there are many possibilities here. It is in no trade zone for me. No, the D is not much lower. D is exactly where it is. This is AB equals CD. If I do this, see, it is exactly AB equals CD. And I'm relatively sure, just because this looks like a perfect Gartley, that if I draw the Fibonacci from over here to here, that is going to be the 78.6s, just because this is, yeah, this is a perfect ABCD, and you know. Well, of course, you are going to be looking for those, but regardless, you're not going to find you're not going to find any single harmonic pattern, or even if you find them, it's going to be very rare to be perfect. Now, the 127.2 extension of BC is just guidelines. Yes, it is a bit lower. However, the real important thing with Gartley patterns, yeah, actually, this is nearly the same. It is not much lower, man. It is. This is a very good potential reversal zone. But the real important thing when it comes to Gartleys is the 78.6. Now, I don't know if you have read Scott Carnley's book. Now, what he says is that a Gartley requires exactly 61.8 retracement of the B point. No, man. If I draw it from the total wall, we are going to be looking at a different pattern. I am just outlining the pattern that I'm looking at the moment. Now, this is the pattern I see at the moment. If we draw it from the downside, uh, to be quite frank, I don't see any pattern at this point. We might potentially have a bat or something in the making. Now, if we draw it from the downside, I know what you're talking about. But if this pattern looks like that, this pattern is certainly not a take. This is not a correct Gartley pattern. This is not technically correct. And I know people trade patterns like that, but this is not technically correct. If you read Scott Carnley's book, you will know why it is not technically correct. However, if we see something like that, if it is a bat, now this becomes technically correct. Now this is technically correct if we see something like that. If this is a bat. And it could be very well a bat. This is 50, so it could be a bat. Yeah, but as I said, the way I trade is not purely on harmonics, it is not purely on one thing. I have my own system, which is a cluster of Fibonacci's, and right now the most important level in this thing is not that potential bad that you have no idea if it's going to occur or not. It is all the way halfway back wonk. This is the most important level. This is the most important level. If this bad trades, it's all good, okay, I'm gonna take it, but this pattern is not confirmed, you cannot see it, there's no way to know if it is going to actually happen, you know, so you are guessing. So this is the only confirmed level of support right now. I'm just looking for cluster of Fibs, cluster of Fibonacci's, to get as much possible support or resistance to have a valid trade. Now, one thing I want to point out before I give you Alexander, I'm going to cover the Dower yen quickly as well, and I'm going to outline something about something that actually SK pointed to me when it comes to the pound yen. Now it is a bit of an overstretch. We need confirmation, but I like the opportunity. It also aligns with everything I've been talking about. On the Dower yen, all I can say is we are holding our next daily wonk. We still haven't filled targets above us, which further reaffirms my view that we should have at least one more high in the yen crosses. So we have this wonk, this daily wonk. Okay, let me just place it. We traded it. We went wonk on this daily wonk, which has targeted the 91.6. They have not filled, and we also have an all the way halfway back wonk that he has been holding, and he has been holding perfectly, you know. So this is rather interesting. The targets of the daily wonk and this halfway back wonk align, and I think I view this kind of as a wedge or a bull flag that is getting retested now. So I don't know, like I would be looking for upside again. Same situation. We are bullish on the Dow yen for sure until while we are above the 9074s. Very clear support in this halfway back wonk. nothing to suggest anything else. Nothing to suggest anything else, in my opinion. Although we are holding the opposing measure move shorts, so perhaps it is better to say that we are within a range. Now, I just want to check some. I just want to move to the 4-hour chart on the pound yen. I have taken a small wonk again. I got stopped out a couple of times. Now I like this because there is a very interesting possibility of inverted head and shoulders here, and that could potentially explain why we are seeing such a congestion over here. We're seeing a lot of, you can see the large wicks that one after another. If this is indeed correct, and that is also further going to reaffirm the view on all the yen crosses in general, that we have a bit more upside, we are going to be targeting the 149s. Now, keep in mind that inverted head and shoulders are not continuation patterns, they are reversal patterns. So, I mean, a lot of people would, like in perfectly technical manner speaking, would argue that this is not a valid pattern, and they are correct for most of the part, but you will often see stuff like this occur, and such inverted head and shoulders to be correct. Now, what I do is I measure the target of this inverted head and shoulders, which 460 pips. I take 10%, so on 460 pips, 10% is 40, 50 pips, say 50 pips. So I need to see a break over 50 pips, over 10% of the head and shoulders target to confirm this head and shoulders is valid. This is a technique that not many people want. If you are more conservative, you could wait for 20% of the target and wait for 10% of the target in order to confirm this head and shoulders to be valid. So if we are able to get to 144.6, we confirm this inverted head and shoulders. I will be giving more information if this happens, so stay tuned, guys. And pretty much that's it for me. Do you have any questions regarding what I've said? Any questions about what I've said before I give you Alexander? Alexander is going to cover the other stuff. Measure target. You know how you measure a head and shoulders target. You just take the low of the head to the neckline, and then this was 470 pips. So I take 10%, pretty much 50 pips, and I need to see a move above the neckline of 10% of the target. Does that make sense, SK? Okay, cool. Now I'm going to give you Alexander. Thank you for listening to me. Again, a reminder, tomorrow I will be doing a 5 to 6 hour scalping webinar. Make sure you stay tuned. I am even going to try to go to sleep very early tonight, so I can be in the office in the morning. Ideally, like, I'm going to give you more information on the timing. Please make sure to continue checking our Twitter feed. I'm thinking to start between 11 and 12, 11 a.m. and 12 p.m. GMT. That is what I'm thinking. Absolutely not drinking tonight, mate. I'm still wasted. I'm sure that you guys can figure it out from my voice. My usual energetic voice is gone. I sound like a sick puppy. What can I say? I am the only one to blame. No, not Polish vodka, Irish whiskey. Yeah, my hair is okay, but my eyes are not. Uh, okay, guys, I'm gonna give you Alexander now. Again, thank you for staying tuned. Please make sure to check the Twitter feed. I'm going to let you know when the scalp webinar is going to happen. Before that, it is going to be either 11 or 12 GMT. Either 11 or 12 GMT. And it is going to conclude, so it is going to conclude by like 4 4 p.m. GMT. 4 p.m. GMT, something like that. So we have enough time to check what the known farms do and how they react. Okay, guys, I'm giving you Alexander now. Thank you for attending. Check sound submit now.
Hello, guys. Um, can you hear me? Yeah, I think you can. Um, okay. I'm gonna start with the pound because I have it up and I've been looking at it for the whole morning. Um, I know that you guys are more interested in the Aussie dollar. However, I feel it's more important to have a look at the pound right now because there's a larger setup trading and could be more profitable. Okay, what you're seeing on your charts is a 1 hour, on your screens. I'm sorry, guys. Is a chart of GBP USD. What we identified as potential resistance levels for the next daily long, short, excuse me, is an extension drawn from the 15945s to lows. As you know, I have double checked this with other price data services. So I was interested in what's going to happen to this level. Unfortunately, we have not seen any resistance at the 50% of this smaller extension short. What we are looking at right now is, and as you can see, this is what traded in the morning. You can see we had a very nice reaction off of it. We could make a case that right now, whoever traded this in the morning has their short riskless. Unfortunately, the pound failed the first halfway back, which it was supposed to set up in. As you can see. What makes me convinced that right now we're seeing participation in this level is that, I don't know, like you see how we first dipped over here, and you see how right now we're holding it to the pip, the 50%, the 583 10. It's a very nice level. I will be monitoring it. For those of you that have not been with us in past webinars, this is drawn basically from the low of your first halfway back traditional, which we held over here at the, you drive from top to bottom. Your entry point was over here. We've been tracking the pound for quite a long time now. Yeah, and what I have to say is that right now on the 15-minute chart, if we turn to it, you're going to see that we're starting to make the 1 hour chart is really nice because it holds it perfectly. If we turn to 15 minutes, you're going to see that, awkward candles walking away from here. This is normally to signal. Actually, this candle is pretty good. I love looking at candles. This is a classical hammer, inverted hammer. This could signal that over here the trend is going to end, basically the long trend. We'll see plenty of support. What should be mentioned is that in the pound right now, we traded two large halfway backs once to target, you see. And if we draw, we can make a case that if we draw from here, this is the first, as you can see, goes to target. If you draw from the anchor that we held, let me just get rid of some of the fibs so you guys can have an idea of what I'm talking about. And if you drag it again to the upside, as you can see, we held the 50% perfectly at a 5.7. We are seeing participation on the long side. We should not, disregard this with, in an easy manner, because what we have under us, and what we anticipate that this next short level is going to break if we hold it is a very big support in the pound, the 1.5666 approximately. This is a very large daily long. Maybe I should have started with that one. If we turn to a 1 hour chart again, we zoom out, you can see that if we drop the bottom to top Fibonacci, basically our traditional, we almost exactly bounced off the 61.8% line, 61.8% line. This is very common for the pound, does this a lot, always respects the 61.8% line. We will see if the bullish case for this instrument is strong. We'll see what the bulls have up their sleeve. I personally am short. Actually, I have a short bias. I'm still not in a short position. I will inform you guys whenever and if I enter a short position on the pound, because I know some of our subscribers have been looking for this one. Joko, I know you've been looking for this one, buddy. Deck, I'm pretty sure that you also want to get in short the pound. Yeah, so this is what I'm seeing. This is what I've been looking at the whole morning. It's been very annoying for me because we've been holding longs. To be honest, didn't have the guts to trade the first touch over here. And if I had, could have been riskless by now. And could be looking at a potential lot of pips. Target is the 1559, basically a 156. And it's also a break of trend. And pound normally what it does, it would not, whenever it breaks a very big support level, normally it would not trade back for a full halfway back, it would plummet. Another, additional 50, 60, 70 pips maybe, and after that, go back for a traditional halfway back. Yep, okay, this is pretty much what we're seeing on the pound. Not much change. I know you guys, I've been talking about this setup for quite a long time, but I am tracking the pound. I love, love trading the pound, and I feel that this is important, and you should follow it. It's always nice to track something from far away, because you have a trade plan, you know where you should get in, get out, what you should trade, and basically have a look at the instrument, how it's trading, etc. All the things that you should be aware before entering a position. Okay, enough with the pound. This is it, basically, guys. Our bullish bearish trend breaks at 1586, at least the extension. At that point, if we break this extension, if we go above the 1.586, we are going to trade a full halfway back traditional, which is going to be drawn from the top to bottom over here. However, this is not a limit order sell. It is a very big level, and we are basically going to have two major levels fight each other, battle over the trend over here, for sure. A 160 to 81 is the level that you should be paying attention if we break the 1586. Okay, enough with the pound. Let's have a look at Aussie dollar. I know that it was the fourth most popular in the in the questions, in the questionnaire. Aussie dollar, really annoying price action, to be honest. At least I won't be trading it for a bit. Okay, 1 hour chart is what you're seeing on your screens. Sorry. Let me just zoom out properly so you can see what's going on. Okay, what we have as a confirmed low, and what we held previously, let me just get rid of all the other fibs so you guys can basically see. This is a larger trend within the Aussie dollar. We have support, and we've been talking about this support at the 103.67 level. What I started considering today is this marginal high, that we should account for it, because we have witnessed a bounce twice of this level. This is the 0385 approximately. Because of this double bounce that we had over here, I am considering that the algos right now are taking into account this marginal new high and have disregarded basically last year's 2012 high over here. So it is very possible that we are front running support by, how much is this? Yeah, this is like 6 pips if I'm not mistaken. Yeah, approximately 10 pips. Let's talking round numbers. Um, about 10 pips. We have witnessed this bounce off of here. How we got here is an extension drawn from here. As you can see, we had the initial reaction. Supposedly, we're still holding shorts double test. Again, a very good reaction of this level. What is... yeah, George says your dollar is free right now. The scalp that he took. I didn't see it. Good bit in Euro USD. Will spill into the yen for sure. We're gonna have a look at Euro JPY quickly. What I'm noticing is that the moment the Euro USD gets a bid, the whole market starts getting a bid. The pound somehow is supported. Of course, they're correlated. The pound gets support from the bid in Euro USD. This is sort of an artificial bid. We've been witnessing this for the past 2 weeks. The moment the euro dollar, goes up, the pound either also goes up or at least stops plunging. Okay, let's get back to the chart at hand. What we had after that, very good reaction of this level was an extension short which traded once over here, as you can see. We went to target, and right now what we have is this. We could argue that right now Aussie has broken its resistance. This is basically half a pip. We could argue that the resistance is broken, but the only thing that we we can witness the break of this short. The moment this happens, we're gonna set up in a maybe halfway back or maybe an extension long, and then we'll be able to trade the Aussie on the long side. I am starting to switch bias a bit. From bearish on the Aussie, I'm starting to look maybe to the upside a bit, because if we finish like this, have in mind today is the last day of the month. If we finish like this, we're gonna have a lull at a major support level starting the month of February. We'll see. You never know. Guys, I'll just mute you for a second because George wants me to tell me something. I'm sorry. Okay, guys, I'm sorry. We're just discussing some technical stuff regarding the company, boring documentation, etc. Yeah, for our subscribers, George is posting a trade. Have a look at it. I have no idea what he's posting. Okay, so this is pretty much what's going on the Aussie. I don't like what I'm seeing. I told you guys very very choppy price action. Our levels have been front run constantly. We've seen ore broken. We'll see what happens. The moment we have a clear trend, there will be a level to enter. We're gonna lose probably 20, 30, maybe 50 pips from the whole move, but from here, trade basically if we hold this long trend, if we zoom out, and if we start going to the long side, our target is the approximately the 1.07. So plenty of pips to the upside. Don't chase. The moment we have a proper entry, we will have a look at it. Same goes for the short side. Um, don't worry. If we break trend, the Aussie will set up at least an extension before it goes down. So we will have an entry into the trend. Okay, guys. Any questions regarding what I've just said? I'm sorry today I'm a little bit slow. Couldn't sleep properly for some reason last night. We're gonna have a look at gold for sure. Interesting things over there. A bit confusing. Took me a bit before I basically got an idea of what might be going on. I'm still not sure. Come on, guys. Any questions, or should I just go directly to gold? Okay, apparently not. Nobody's typing anything into the chat. Let's have a look at gold. Okay, this is what we have from yesterday. We delete this and we start from scratch, basically. What you should be aware, of course, is we still have this from yesterday's drawings. We're still within a traditional short drawn from the 1754s, which has been retested. As you can see, this is the first time we held. There was a second test of this short. What you should know also is that we broke trend, major trend, 1629. As you can see, we dipped in here. What we should also explain, maybe to the guys that are new to this room, is that all the way halfway back along, which would have provided some support maybe for gold, you know, give us an idea over here, maybe at least make the longs free before plunging and breaking. It's drawn from the 1625.76 to the 1697. If the bullish side, the bulls in gold, wanted to basically give us something, an idea that they're there and they want to participate, they want to fight us, they know and acknowledge this break, we would have had some reaction. I disregard this, to be honest, because this for me is a totally reactionary move. We saw this came from the GDP number that came out yesterday for the US. Okay, let's get rid of this. Just a sec, guys. Жоро, може ли само да намалиш това, защото чувам се и ме дразни как се забавя. Okay, guys, sorry, George's headphones are too loud. I can hear myself, and the delayed noise is really annoying. Okay, if you guys remember the first time that we traded down, I was explaining that we should have a halfway back. Basically, how the trend went was from this level. We traded traditionals. First traditional that held. From here you draw again. Second traditional. This is within a 15-minute time frame. And when I explained, I don't know, most of you guys, most of the subscribers that we have, I explained to you guys that the last clean entry was the 1683 because the trend got funny after that. If you draw the full halfway back over here, actually the next in the series, not the full halfway back. If you draw the next in the series from the 1683, you can see that we didn't have a clear play over here. You know, things just got a bit, you know, sketchy. Front run of this level traded, you know, below, didn't respect properly. At that point, I told you guys that I would be expecting to have a full retracement, you know, after this, because we broke micros over here. As you can see, this is purely an observation. This is, you know, guessing in the dark. I've seen, you know, gold do this whenever you don't have a pullback. You know, it goes back, respects another level. What I'm saying is purely a guess over here. You know, as you can see, we held perfectly the 61.8% line over here of this short, the 1684. What would signal us if this is basically a legit retracement is if we don't hold the halfway back. Basically, shorts participate over here. Somehow the algos have attached themselves to this level. They wanted it to play it out. They were waiting. This basically, this elevator up during the GDP print was a perfect play for them. This was something that they were waiting for. So as you can see, we held this retracement. We will see what is going to go down. If there is long side in gold, let me just get rid of this. If there is long side in gold, it will be signaled to us by this retracement, the 1667. To be honest, if I'm not mistaken, this is also the full halfway back, which we supposedly broke. Yep. No, it's the 1661. Okay, my mistake. Doesn't matter. If there is any long side, and it's going to trade soon, if there is any long side in gold, the 1667, approximately 1668, they are going to signal it to us by defending this long, for sure. Because this is a countermeasured move which started, supposedly broke, are all the way halfway back, which we have from here. I know it's a bit confusing, guys, but if you want me, I'll repeat it tomorrow during the educational webinar. As you can see, we broke all the way halfway back, which maybe, you know, could have provided us with some resistance. You know, speaking purely on the strategy, purely technically, we're breaking a halfway back short. We will set up in a halfway back long. This is it, or we would have traded an extension. This is how gold trades. Any hint on the long side will be here. Also, another thing I would like to mention, don't limit order anything over here. Officially, this could be a range now. Very choppy price action, you know, multiple misholds of levels. This could be potentially a range over here, and we could be stuck for quite a long time over here because failure to break down over here. Also, you know, failure to break the short, maybe go for a full halfway back short, which is at the 1711 right now, the big one. This one over here. We'll see. Plenty of things to think about on gold. We're going to be patient and look at it. What George and what I should say is that the setups that I am providing you with, guys, or moreover the things that I'm analyzing right now, are a bit how should I say, dubious. They're not proper setups. At the moment, price action in these instruments is not good. What you should stick to is setups in, for example, the Euro USD, the Euro Yen, USD JPY is not, out of the question. Very good. I don't know if George covered that. Um, it's a good setup over there in the dollar yen. It's holding traditional halfway back. Uh, just a second, guys. I'll use the JPY. Okay, yeah. So George walked you through USD JPY. Okay, guys. Any questions regarding gold? I know it's a mess, but this is what normally happens. I told you around FOMC days, non-farm payrolls, also GDP prints. This is what happens to gold. You get these reactionary trades. From this is retail based. If this was fund based, if this was the hedge funds, we would have, if the hedge funds decided the gold was bullish, like they needed gold right now, they wanted to buy it up and the price is good for them, this would have skyrocketed. This would have at least gone to the 1711. You will witness these moves. I don't know, you've seen in properties if you've been trading for quite a long time. If this was fund based, I promise you guys, you would have seen at least, you know, a $30 move. That's the kind of moves that you would see the moment the funds let go or start buying. Okay, guys. Any questions regarding what I've just said? Seems like no questions. Come on, guys. Pound is keeping its retracement. We'll see what's going to happen there. The moment that we have an idea, I promise that I will keep you posted. Okay, no questions? Come on, guys. Okay, no questions. To be honest, I don't know anything else that we might talk about right now. The market is a bit, volume is thin after yesterday's announcements. Of course, we should be aware that FOMC, not FOMC, sorry guys, non-farm payrolls is tomorrow. Major event risk, for sure. It will give us, an idea of where this market will go. It's going to be a catalyst, basically, for if we keep our longs. If this market keeps up this longs, disregard gold. Gold is, and it's right now it's not a good instrument to trade. But I'm talking about the USD JPY, GPUSD, Euro USD, Euro Yen, all these things, which are related to the dollar properly. We will see something happen. Maybe we'll see a move in gold also. You never know. Non-farm, if we get a terrible miss, you're gonna maybe feel more QE speculation. God knows. Depends on how large players interpret it. Let me pull up a chart of Euro USD. I would like to, if I can find it again, I would like to point out something interesting. Okay, let me just see. What was the... What was it on forward chart? Basically, what I want to show you is that if we reverse from here and if we don't fulfill the targets of this extension right now, the next valid support that we have is basically a 135 I just have to find the retracement and how I got it in the morning. I I did it at home. It's pretty interesting, to be honest. Yep, I think this is it. Okay, yeah, what you're looking at right now is a chart of Euro USD. This is our extension, which we talked about, which we identified, which traded basically to a front run of 4 pips the first time. Also filled targets perfectly. Let me just get rid of this. Also filled target perfectly at the 1347 mark over here. I would love, basically, I like thinking of this extension that this is the extension that took us up. Of course, we will never know for sure because this extension was also in play because we reacted multiple times off this 50%, you know, because this over here is too large of a front run, you know, to trade the 50%. Of course, you never know. You never know for sure anything in the markets. What is happening right now is when the moment you break out of basically you reach target. The moment you reach target here, classically you would ideally want to have a pullback over here to the 132 and then fill targets. That did not happen. What I want to say is that next daily long over here, if we zoom out a bit, if we have a look at the larger time frame, if we reverse from here, which is to be honest highly unlikely, seeing how the euro dollar is trading, just on a theoretical note, I just wanted to point out that of the 134, basically the 135, and if you drop the big short level, you know, the 50% that we have, over here, basically perfectly aligns with the retracement that we might have as a daily next daily long. Basically, there are some orders that were hidden behind this level, the 1349. You remember that we wanted to short this level. Of course, we quickly reversed our appetites as we saw how the euro dollar was moving away, from support levels over here. But if we pull back from here, I'm just saying this because the candles that we're getting on a 4-hour chart right now don't look as a continuation of the trend, but as you can see over here, it was the same thing. If we get a pullback from here, it will be at the 135 level, which also is the 135 is the big 50%. It's just something that you would notice, looking at a 4-hour chart. It's an interesting fact. You would expect to have support over here, It's not something that you would disregard just, blindly. Okay, that's something I wanted to share with you. Been noticing these really interesting things around the euro dollar. What is currently trading, and you should know that, put it up in the morning briefing, is an extension drawn approximately from the 1349 to highs. Perfect touch of the 50%. Yep, that's pretty much it. Targets are at the 136, if I'm not mistaken, right, George? For Euro USD. Yep, 136. It's going to be interesting. Have in mind it's the last day of the month right now. So interesting things to happen. Either I don't know, we continue this. It would be nice to have a correction so we can continue this during. Yeah, George disagrees on the correction. Of course, it's always nice to have a correction. Of course, trend is long until it's not. That's what we say around the office. That's what people that use this strategy have taught us. Always what you see in front of you, even if you don't believe it, that's what's happening. Keep in mind your retracements, your price measurements are, the moment you know the strategy, are 100% correct. Having faith in what you do and in what you draw, and you will be successful within this strategy. Of course, manage risk. Yeah, guys, this is pretty much what I have for you. Pound, walking away slowly from this level. Would love to see larger reaction. Okay, guys, if you want, we can have a look maybe at the site because I noticed that there are some new people in the chat. This is basically the main page of our site. I apologize to our subscribers, which right now are in the webinar, but you will not be tormented by me, explaining our site anymore. It's only today and tomorrow. This is the main page of our site for today, and tomorrow. Still, the login is test, and the password is test123. It says 2 days, doesn't matter. Maybe we're gonna leave it till the end of the week, doesn't matter. Okay, if you click on charts, this is all the analysis we do regarding all the pairs. You have EURUSD, GBPUSD, Aussie dollar, etc. All the things. We are going to start covering SPX because I'm anticipating that maybe the range is gonna start, being larger in the SPX. We're going to start doing analysis over there. George is showing me that he posted a position on the site. Okay, man. Yeah. What is? Okay. Yeah. You guys can have a look at the trade performance on the. Sorry, guys. Let me just talk to George. He doesn't know what he's talking about. He's giving me false information. I'll mute you guys first. Okay, guys, I'm sorry. What George wanted me to mention is that since we initiated the site, we have a private Twitter feed. The signals that we have posted over there are right now net 730 pips up. I know this. We don't want to brag. We're good at what we do. We want to bring our client money, and I'm sure that we're worth the money that we're asking. Okay. On another note, let's continue with the site. Simeon said I should refresh. He just mentioned that it's the last day. Actually, today is the last day of the month, so it's the last day of the trial period. Doesn't matter. This is what you would get. This is the analysis that we do. A lot of analysis. You're going to get a lot of reports. We always talk to our customers. We do private, analysis. If somebody asks us for something in particular, we're gonna do it. Doesn't matter if we include it or not in our daily analysis. We would just, go draw up your charts, etc. If you click on reports, this is where you have your morning and evening briefing. This is the morning briefing comes out around 8 GMT. AM GMT in the morning. That's how we like to post it out. It includes basically the major pairs, so the Euro USD, the Aussie dollar, the pound, gold, and also I include things which I see important and you should guys know. Of course, we have the evening briefing. George types up this report. It comes out by 12 GMT. Basically covers what has happened during the day and also what we're expecting for the Asia trading. So we pretty much cover all trading sessions, which is a benefit. Few services basically cover all trading. If you click on reports, you would notice these are just reports that things we've seen in the markets, things that we would like to point out. We post different regarding different instruments. As you can see, this Nikkei report, we did it for at the time he was not a subscriber. Right now he is. Zoltan, if you're there, buddy, your report is still here. I hope it was helpful. We have also here the weekly recap, which we're right now debating if we're going to do as a report or as a video. We'll see how it goes and what subscribers want. Depends on the demand. If you click on education, you're going to find details regarding our strategy, trading rules, how you should handle your resources, basically your trading account. Also, there's an article on equity curve and drawdowns. Market just opened, by the way, just to mention. And introduction to harmonic patterns. As you know, George is a very big fan of Garthy patterns. He uses them a lot. Here is a small introduction, basically, to what he does. I've been reading it myself also. After subscription starts, we will be posting out a reading list with all the books that me and George and Simeon, for that matter, have read in order to get at this level of technical analysis. Also, there are 2 books on the harmonic patterns. There will be 2 books in the reading list. Stats right now is not active because we have not done any analysis due to the large pile of work that we have on other parts of the site. But we will start doing this at the first possible situation we have, first free time we have. This will be regarding correlations within the market and also seasonal trading. If you click on portfolio, over here you will be able to see all of the positions that we are in currently. Especially highlights of our trading. We would keep them for a longer time. Doesn't matter. It's just a nice way of showing the positions. If you click on performance, something's wrong with our internet. Seems like we're getting some problems with the internet. George, am I active? Okay. Okay. Here it is. So yeah, this is basically the most recent positions. This is what we have since the start of the site, if I'm not mistaken. This is for January. Excuse me. This is for January. This is the trades that we officially had. There are other trades that we took on our personal accounts. We don't like to disclose all of our trades because some of them some of the trades we take are out of the system and are based on our own analysis. Personal trades that you would do as a trader. And if you click on video, here you have basically the recordings of these webinars that we're doing currently. You could watch, anything that you would like. George wants me to point out that Euro is getting a bid. I'm sure that you guys, besides to this boring stuff that I'm talking about, are also looking at the market. Yeah, that's pretty much it for the site. Let's, oh yeah, most important, sign up. Very straightforward. You get us, if you buy, the 3 months back by the 7th of February, you get us for $60 for 3 months. Basically, you get April free. From May 1st, single month subscription costs $50. After the 7th of February, any single month subscription costs you $30. And from February 1st, from February 7th, actually, the normal 3 month pack kicks in. And you can get any 3 months for $30. Basically, if you buy the 3 months pack, you get a 40% discount. So you get 3 months for $90. Any 3 months on a single subscription after May would cost you $150. You can do the math. If you're on our site, it means you're a trader, so you know how to multiply and delete. I'm sorry, guys. I'm digressing. This is what you get. Basically, I walked you through, but if you want to have a look at your on your own, as I told you, site is free until tonight at midnight. Maybe we'll leave it also for tomorrow. It's not a big deal. Plus minus 1 day. We would love to see you as our subscribers. Also, something that I should point out is our disclaimer. It's viewable on every page, also in the reports. I'm not going to read it to you. You can read it yourself. Yeah, that's pretty much it. Okay, guys, I am going to stop